Hi, good afternoon, everybody. So sorry, there's a bit of a technical glitch. So I know while you're waiting for this topic, let me share what our topic today. I'm waiting for property prices to drop. So before I go into the details, I'd like to share a little story. How many of you are like Mr. and Mrs. Wong? So they like to study property, they look at the statistics. After their flat MOP, they actually went around looking for properties to purchase. So they look at multiple new launches and find that they are a little bit pricey. So that's when they started to visit older properties. So they found that other than size, there are actually many other things that leave much to desired. So they are rather well informed of the market and recognize that new launches and resale properties, the prices do move in tandem. So when new launches price increase, likelihood the resale prices will also follow suit. Of course, that really depends on the type of property, the tenure left that they are looking at. So when it's time to narrow into the units, they pull the handbrake because I am waiting for prices to drop. So my question, studying the charts actually give you a whole bunch of statistics. But can you piece together all the information and make sense out of this data and rationalize when the waiting game will end? So no one can time the market accurately, but understanding the factors that affect pricing will actually help you with the decision making. Hence, this topic today, I am waiting for prices to drop. I'd like to share with you what determines pricing. So it's a big topic and I'll be spreading this over 3 sessions. So stay tuned. So let's start. Okay, so what is a price bubble? So this is defined by UBS. Give me a moment. All right, this is actually by UBS Global Real Estate Bubble Index. It's a report that I got recently. So what is the price bubble? So price bubble happens when there's a decoupling of prices from incomes and rents and imbalances in the real economy. For example, your price increase in property way exceeds the pace of our GDP growth or even our income growth and many other factors. So today we are really going a little bit more in depth to actually study how pricing is actually determined. So pricing 101, we always know that pricing is a function of demand and supply. So demand, we talk about income growth, interest rates, demographics, state of economy. So that's who are the people buying and why are they motivated to buy? So supply, very straightforward. How much land supply do we have? What are the units we have in the market? So these are essentially things that affect pricing. But I think in Singapore context, another thing comes into play. We are not staying in the perfect world. So there are always regulations that also affect how property prices will swing. Okay, so now looking at this, these are actually data we obtained from the Department of Statistics. So we tabulate them. So there are more households with higher income. So this is a chart showing the income for range from 10,000 to 12,000. So at the end of 2019, we are talking about 110,000 households with this kind of income. So next year, this is between 12,000 to 14,000. Slightly lesser, which is at 88,000. But what is interesting is if you observe, so between 10 to 14,000, we are talking about close to 200,000 households with that kind of income. But look at this. This is from 14,000 to about 18,000. We have 112,000 households. So you can also realize that perhaps it's a widening of income gap, or it's just showing how affluent people get over time. So we actually see a 243% increase from 2005 all the way to 2019. And look at this. This is from 17,500 all the way to 20,000. So this makes up about 170,000 of the households in Singapore with this kind of high income. So notice that all these trends, they are really on the upward the household income is really on the upward trending side. And this is the one that I think it's mind-blowing. This is for income 20K and above. And look at the numbers here. It is actually more than the households who are earning between 10,000 to 14,000. I think that's really what's one of the strong reasons on why property prices are really going upwards. So, and this is actually showing the CPF balance, member balances. So again, looking at this color, the light brown, you realize that our OA balances is actually on the rise. Similarly for our special account, which is the one in green. So again, this shows that people are getting affluent, and that is definitely one determinant of why people are buying into property. When they have money, they want to grow it. So some people may not be savvy in terms of financial products. So they find that, okay, property is probably a good hedge against inflation. It's something they can touch and feel, and they are more comfortable with it. So this one is obtained from, again, data, local government data. So this is the money supply. So what is this M2 money supply? So this is talking about liquidity, cash, or some financial exchange, monetary products that can be easily converted into cash. So things like your cash, your fixed deposit, and even government bonds. So again, looking at this part from around 2010 onwards, all the way now, is definitely on the rise. So now we have covered the income growth and, of course, touch a bit on the savings by looking at the M2 supply and their CPF. So the next thing we can talk about will be interest. This data, again, all these are publicly available information. Notice that our 3-month interbank rate is really on the downward trend, and this was from November 2019. So today's market, right, we have heard interest rate that can be as low as 1.0 something percent. So I'm not too sure if it's a very strong group profile of that buyer, or banks are really all out, trying to boost their lending profile. So this is what we are experiencing today. So this is definitely a factor in driving prices. Why? Because when interest rate is low, people will feel that, hey, since the borrowing is low, should I use the money and put it in something that can actually offer me higher yielding products? So property comes into play. Because if you actually experience such low interest rate, chances are the monthly mortgage that you're servicing, a big chunk actually goes into paying off your principal instead of paying for interest. So this is something the very savvy investors, they recognize. So next, we move on to demographics. So our Singapore demographics, like it or not, it will actually grow up to 6.9 million by 2030. So right now, we are at this mark, all right? About 5.8 million. So this data was obtained recently, very recent. As of September this year, we have about 5.85 population. And looking at this trend, do you think we will eventually hit this target? Even if we do not hit 6.9, we are now at the lower end of 5.8. Do you think hitting 6.5 million is something that we are aiming for? So this is for you to ponder. So next, when we talk about demographics, we also want to know how many households are there, what kind of households are driving the demand. So if you look at this, our resident household in 2009, there's a growth of 3.6%. So what does it mean? Households will be like individual family nucleus. That's what they define. 3.6 increase. So will these people need to stay by themselves? So the answer is yes, there is a demand for such growth. There's demand for property because of such household growth. So household growth can be things like, children getting married, they move out on their own, that becomes a separate household. Okay. So correspondingly, you notice that the average household size from 3.49% in 2009, we are now 3.16%. in 2019. So the household number increased, but the number of people living in the household have decreased. So what does it mean to a homeowner? Do you think you need a very big place, or do you think a two-bedder will be sufficient for the future? So these are things that will potentially affect the type of demand, the different demand for different property types. Okay, and right now, look at this. This shows that those who are living alone, they are also classified as a household. So from 2019, it's 10.3%, and today it's 15.2%. So these people definitely have to find a place to stay. Next, we talk about couple based without children. So couple without children, from 14.4%, it raised to 19.1%. So again, these are where additional households are being created. But if you look at couple based without children, there is a decline. But I would think that the decline is probably spread to the other areas where it could be a lone parent staying now alone, or someone just staying alone, or children went overseas to study. So these are how these figures actually work now. Okay, so for dwelling type, HDB dwellings, you realize that there's a drop from 83.6% to 78.6%. So these HDB dwellers have to move somewhere. And where do they move to? Now look at the condo. Condo and other apartments, you see a 6% increase. So I would say it's HDB dwellings, they probably will upgrade to condominiums. That's why you see the increase in dwelling types in 2019. So the desire to upgrade to a private property is actually very real. So we further illustrate this. These are recent articles. So HDB upgraders are recycling their flats into private homes. So this will continue to buck the trend for transactions in private property market. So another thing to look at this is, so analysts believe that selected projects will do well, especially if they appeal to the upgraders. So we always say, how come so rich? Everybody is buying. The fact is, from the earlier numbers, you see that savings would have increased. Their income has also increased over the years. So they are still very cash rich. And to them, the employment risk is likely very low among these locals. Like recently, when I've seen a lot of sales, a lot of these buyers are actually pretty young millennials, and they are definitely very bullish about what's going to happen ahead. So now we have covered demographics. So let's talk about the state of economy. Okay, this is dated August 2020. It says that we are set for strong rebound in 2021. In fact, recent article, also it's very recent, 13 October, that economists forecast sharp rebound for Singapore Q3 GDP. So all this data are starting to come in, and I think, like it or not, COVID pandemic is here to stay, but I think there's a silver lining. Once our vaccine is actually discovered, things are more under control, things should get back to normal. In fact, right now, as our economy opens up, phase 3 of the opening, you feel that there's some sense of cautious normalcy returning into the market. And even in malls, people are coming out. So, of course, talking about such local businesses, we also talk about some international money coming into our market. So jobs are created. Huawei is going to open a lab in Singapore. That was in 2019, pre-COVID. Okay, this one is about TikTok. This is something more recent, in September 2020. So they are planning to spend billions in Singapore. So we don't know how many people they're going to employ, but for sure, when they have an establishment here, there will be jobs being created. This is actually taken from EDB website. So other industries or other companies, Thermo Fisher Scientific, they are already in Singapore. So now they are actually expanding their factory and for vaccines and therapies with new facilities in Singapore. This actually goes to show that our foreigners, they are actually very confident in our Singapore market. And of course, our employment situation in terms of talent is something they are very comfortable with. Otherwise, they wouldn't want to spend so much to further invest in our country. Okay, this is also something recent. Hyundai Motor Group. So again, they are also setting up more offices like a innovation center in Singapore. So why are they choosing Singapore and not other places? This is again we have to credit what our government has done in terms of attracting FDI and hence job creation. So these are really good reasons for us to be bullish about. And again, on 13th of October, analysts see balanced fundamentals in Singapore private market. So they are actually referring to this UBS Global Real Estate Bubble Index. So in the report, they actually analyze different markets and not decide, but come to a conclusion whether a particular country have that kind of risk or not. So Singapore is actually considered fair value and we are very balanced. Okay. So no signs of overheating, according to the index. Okay, and government remains watchful on the market. All right, so I think in Singapore, a lot of people are heavily invested in property. So it's, in my opinion, is an industry that can't afford to crash. And with all the regulations that comes into play, this is actually helping us to have a more resilient property market. So our attractive mortgage rates, fundamentals, and the demand should also limit the upside. So food for thought. So the analysts thought that home prices will soften in the near future, but government has not eased cooling measures. So the stamp duties in place actually help to constrain the prices. So if you actually look at URA Q3 estimate, so in terms of all residential, there's a slight increase. And if you look at the non-landed segment, it's only CCR that registers a dip, whereas RCR and OCR, they actually show an increase. So, so moving back to this, do you think that the prices will soften or is only limited to a particular region? I think right now when we see some, the few weeks ago, Penrose actually had a very successful launch. These are mainly driven by it's mainly local demand. So, and these are real demand. We are not talking about having a lot of investors who are in town to actually put in their check and go for balloting. So all these things actually point to pretty strong demand from the ground. So with that, I've covered, give an overview of the demand side, how it actually affects pricing. So in my next Facebook Live, I'll be talking about the supply side. After all, we know price, I mentioned earlier, pricing is a function of demand, supply, and in our context, regulation. So I think stay tuned. Next week, there'll be more interesting things for you to start piecing the information together for you to make an informed decision. If you are impatient, just drop us a note or WhatsApp me, and we can always discuss about the market before you decide to take the plunge. Okay, with that, thank you very much for your time. I will end our session. See ya.